Stellar just pulled off something no one saw coming. While the rest of the market was chasing meme coins and licking the wounds of yesterday's corrections, XLM quietly detonated a signal that most retail investors completely missed. No hype, no celebrity tweets, no flashy partnerships. Just raw, institutional-grade movement backed by actual adoption. Overnight, the entire narrative flipped. This isn't just a price bump. This is a systemic pivot in how Stellar is being perceived, not as a relic of the 2017 altcoin cycle, but as a strategic layer for regulated global finance. And what's wild is, while retail was distracted with the usual noise, the institutions were already in position. They've been watching, they've been testing, and now, they're moving. The crazy part? Most people still have no clue what's happening behind the curtain. They see XLM as that other payment coin. But under the surface, a tidal wave of infrastructure just went live. We're talking about live smart contracts, enterprise-grade DeFi, cross-border liquidity ramps that banks are already plugging into. The narrative didn't just shift, it got weaponized. This is not speculation. This is not a pump and dump. What just happened is a quiet but powerful breakout. And if you're holding XLM right now, you're sitting on an asset that just transitioned from being forgotten to becoming one of the most functional, real-world assets in the entire crypto ecosystem. This isn't the time to sleep. This is the moment smart money has been waiting for. So ask yourself, are you watching this from the sidelines? Or are you on the right side of the shift? Smash that subscribe button right now because we're diving deep into what the institutions are doing while retail is still asleep. If you want to stay ahead of the curve, you're in the right place. Overnight catalysts. What triggered the surge? Let's break it down. This isn't just a random spike in price or some recycled crypto hype. What just happened with Stellar was strategic, targeted, and completely under the radar. While the headlines were chasing ETF drama and memecoin nonsense, XLM detonated a multi-layered catalyst stack overnight, and it's already shifting the entire trajectory of this ecosystem. So what exactly triggered this sudden momentum? Let's get specific. 3 game-changing developments just hit at the same time, and together, they've created the perfect storm for an XLM breakout. Palago Labs just doubled down on Soroban. The first trigger was the announcement from Palago Labs, and this one's big. If you're not familiar with Palago yet, they're not just some experimental DeFi app. They're pioneering real-world credit access for global businesses using tokenized invoices. Think of it like this: instead of waiting weeks for a payment from a buyer, a small business can tokenize that invoice, plug it into Soroban smart contracts, and get paid immediately, often in stablecoins settled over Stellar. But here's what shocked the market. Palago isn't just scaling. They're going all in on Soroban. They've confirmed a full expansion of their platform across Southeast Asia, Africa, and Latin America, live production use, with working capital pipelines flowing across borders using Stellar smart contracts as the rails. This is real-world utility. They're onboarding enterprise users, partnering with fintechs, and they've already processed over $18 million in tokenized invoices in Q2 alone. That's not testing. That's adoption. And every single one of those flows touches the XLM ecosystem and uses Soroban to make it compliant. This is the kind of use case Ethereum still struggles to scale for. And it's happening now on Stellar. $52 million liquidity injection from Asia, not retail, real institutions. The second catalyst came quietly, but with a massive impact. A surprise $52 million injection of liquidity hit the Stellar network, originating from a licensed payment corridor operator based in Singapore. Most retail traders missed it. No flashy press release, no viral post. But when you track the wallets and anchor activity, it becomes clear. This was institutional capital, specifically tied to a growing trade finance network that's now running Stellar-based invoice discounting in Malaysia, Indonesia, and South Korea. Here's what that means. Real companies are now getting paid faster using tokenized documents and smart contracts on Stellar. No legacy bank fees. No 3-day delays. Just real-time liquidity, settled on-chain. And the reason this matters? Institutions don't inject $52 million into a network they don't trust. This is long-term infrastructure capital, used to support real transactions, not just trading volume. It fuels settlement liquidity, corridor onboarding and enterprise adoption. And let's be honest, when was the last time you saw an institutional partner inject tens of millions into a Layer 1 project without asking for headlines? This wasn't a marketing stunt. This was deployment. Quiet, precise, purposeful. Regulatory clarity in Europe just greenlit Soroban smart contracts. But the third catalyst? This one might be the most important long-term. In a move that caught everyone off guard, regulatory authorities in the EU issued new guidance that effectively clears the way for Soroban-based smart contracts to be used in legally recognized remittance and invoice tokenization services. That's huge. We're talking about official clarity that recognizes Soroban's architecture as compliant for two of the biggest use cases in the world: cross-border remittances and invoice finance. These aren't fringe use cases. These are trillion-dollar flows that banks have been choking for decades. The key is that Soroban was built with compliance in mind, WASM-based, easily auditable, deterministic contracts that regulators can verify and approve. And now, that structure is paying off. Projects building on Stellar can operate within existing frameworks, while Ethereum and Solana dApps are still battling lawsuits or geofencing users. And that clarity has ripple effects. It means more fintechs can legally operate on Stellar in Europe. More anchors, more stablecoin ramps, more enterprise integration. This wasn't just a regulatory win, it was a green light for global expansion. This is the turning point we've been waiting for. When you put all of this together, it's not hard to see why the market is suddenly waking up. Palago Labs scaling real DeFi credit. $52 million in liquidity from regulated payment corridors. Regulatory clarity in one of the most important regions on Earth. This isn't noise. This is foundational. And while the price might still look calm on the surface underneath, the fundamentals just broke into a full sprint. Retail still hasn't caught on, but Wall Street is watching. Institutional players see what's coming. Liquidity providers are repositioning. And those who've been quietly accumulating XLM over the past 12 months, they're finally seeing confirmation that this wasn't just a bet. It was a thesis, and it's playing out. The next leg up for Stellar isn't going to be hype-driven. It's going to be utility-fueled. And that's exactly what makes this moment so powerful. On-chain metrics reveal what's brewing under the surface. Let's be real. In crypto, talk is cheap. You can say whatever you want in press releases or flashy Twitter threads. But on-chain data never lies. And what we're seeing right now on Stellar's blockchain, it's not just bullish, it's transformational. Because this isn't a meme pump. It's not whales playing games. This is a deep structural shift in network activity, and it's happening faster than anyone predicted. Overnight, multiple key metrics just exploded. Let's look at the raw numbers. Active wallets spiked 27% in just 24 hours. That's not retail FOMO. That's not just a few thousand new signups. This is organic wallet activity increasing in real time, and it's being driven by actual usage, not speculation. More users are interacting with Stellar's network. Why? Because more apps are going live. Because fiat ramps are connecting. Because small businesses and fintechs are now onboarding real clients through platforms like Palago, and they're doing it with USDC, EURC, and other fiat-backed stablecoins on the Stellar rails. We're seeing utility, not noise. And it's sticky utility, meaning these wallets aren't opening for hype and closing a week later. They're being used. Soroban's smart contract deployments jumped over 300%. Let that sink in: a 3x surge in live contract deployment in a single 24-hour window. This isn't some testnet beta. This is live code on mainnet powering real-world financial tools. From invoice tokenization to automated payroll to credit risk scoring, developers are shipping applications. Right now, on Soroban. And this is what sets Soroban apart. It's built for utility-first, compliance-aligned DeFi. It's not some general-purpose sandbox where anyone can YOLO a yield farm. It's tightly engineered for financial logic with deterministic execution, WASM-based performance, and smart contract guards that make it enterprise-ready. In short, builders are showing up, and they're deploying serious infrastructure. Not hype tokens, not clones, but real fintech functionality that ties directly into Stellar anchors, fiat ramps, and business workflows. This is what real growth looks like. XLM transaction volume just hit its highest level since early 2022. Let's be clear, this is the biggest transaction volume spike the Stellar network has seen in over 2 years. And here's the kicker. Over 60% of that volume was tied to stablecoins. Why does that matter? Because stablecoin volume equals real money moving through the system. Not trading, not wash volume, but actual cash flows, remittances, B2B payments, invoice settlements, payroll automation, all of it powered by assets like USDC and EURC on Stellar. And that tells us something massive. Stellar is no longer just a payments layer. It's becoming an infrastructure backbone for digital finance. This isn't a trend, it's a transition. Here's the thing most people still don't get. Stellar isn't trying to compete with Ethereum by copying Ethereum. They've taken a different route entirely, by designing for real-world usability from day one. Soroban doesn't aim for hype. It aims for compliance, auditability, and performance. The Stellar network isn't prioritizing NFTs or meme coins. It's optimizing for stablecoin settlement, financial access, and scalable enterprise integration. And unlike most layer ones that are still pitching ideas, Stellar's tools are already live and already being used in emerging markets, trade corridors, and fintech apps. This is a key pivot point in the project's life cycle. The XLM network is now hosting actual financial primitives, not theoretical use cases. We're talking about invoice tokenization for working capital loans, smart contracts for cross-border salary payments, KYC enabled on/off-ramps in 70+ countries, permissioned access layers for enterprise compliance. This is where the value gets created. Not through speculation, but through service. Stellar just became useful, and that changes everything. Let's cut to the chase. Utility is the only bullish signal that truly matters in this market. Narratives come and go. Hype fades. But utility sticks. And what we're seeing in the on-chain data right now is proof that Stellar has crossed the threshold from potential to actual impact. Builders are deploying. Users are transacting. Institutions are funding. And XLM is at the center of it all, serving as the glue between smart contracts, stablecoins, and real-world value flows. This isn't the start of a hype cycle. It's the beginning of mass onboarding, and it's happening faster than the market can process. So if you're holding XLM right now, understand this: you're not waiting for a speculative breakout anymore. You're holding infrastructure. And as the data shows, that infrastructure is going online right now. Institutional traction is accelerating faster than anyone realized. The institutions are no longer testing Stellar, they're deploying. Just this week, we saw the following. AEON Group, a major trade finance tech provider in Europe, finalized Phase 2 of their Stellar integration. MoneyGram Stellar rails went live across 22 additional countries, with full cash-in/cash-out functionality now covering nearly 80% of global remittance corridors. And Franklin Templeton quietly expanded their stablecoin pilots with Stellar, focusing on tokenized treasury settlements. This is the kind of institutional adoption that Ripple talked about for years, but Stellar is doing it. AEON's integration is massive because it allows small and medium enterprises to tokenize receivables and get paid in hours instead of weeks. That changes the game for cross-border liquidity. MoneyGram's expansion proves that Stellar's compliance-first architecture works. They've integrated with cash agents, mobile wallets, and KYC providers to make sure fiat ramps are seamless, especially in emerging markets. And every time someone uses those ramps, XLM is in the background, facilitating settlement. Then there's Franklin Templeton. Their tokenized asset play isn't just theoretical. They're using Stellar to test daily redemptions and settlements of tokenized treasuries for institutional clients. That's trillions in potential flow. If you thought Stellar was still some dusty 2017 payment coin, it's time to wake up. It's becoming the financial layer for compliant, real-world DeFi. Why Soroban is a sleeper giant the market hasn't priced in. You can't talk about what's happening without understanding Soroban, Stellar's smart contract engine that launched quietly while everyone was distracted by Ethereum, Solana, and meme coins. But here's the truth. Soroban isn't just another smart contract platform. It's the first to be built from the ground up to comply with the demands of banks, regulators, and real businesses. Let's compare. Ethereum, powerful but expensive and unscalable for real-time settlement. Solana, fast but struggles with uptime and security. Soroban, built for low-fee, high-throughput, and audit-friendly finance. The developers building on Soroban aren't DeFi cowboys, they're fintech engineers. They're building apps for factoring, payroll, credit scoring, real-time FX, and regulated tokenization. And now that the Stellar Development Foundation is actively incentivizing Soroban builders with a $100 million fund, the ecosystem is exploding. Palago Labs was just the beginning. Over a dozen new apps are launching in Q3, and many are focused on replacing legacy TradFi functions like letters of credit, supplier financing, and B2B payments. This is how institutions adopt blockchain. Not through hype, but through seamless, compliant infrastructure. And Soroban delivers exactly that. Why XLM's tokenomics now matter more than ever. Let's address the question most retail investors are still stuck on. Why hasn't XLM mooned yet? Here's the real answer. Stellar has been building first, pumping later. And now we're entering that later. The total supply of XLM is capped at 50 billion, with a significant portion already distributed. Unlike many other networks, Stellar burned over 50% of its original supply back in 2019. That shows long-term alignment with utility, not inflation. Now combine that with what's happening. The Soroban ecosystem will require XLM for gas. Anchor services like cash-in/out points use XLM for settlement. Real-world asset tokenization uses XLM for fee abstraction and finality. In other words, XLM is finally being used. Not speculated on, not held for hype, but consumed as fuel for the Stellar engine. And that creates something crypto rarely delivers: sustainable demand. Now that Soroban apps are live, every transaction increases XLM burn. Every stablecoin swap, every payroll contract, every DeFi credit facility burns or moves XLM. This reduces circulating supply over time, while utility demand grows. That's the classic setup for a supply-demand breakout. It's not a meme. It's real token economics tied to real business activity. And it's happening now. The bullish case for XLM is no longer a theory, it's reality. Here's the bottom line. The market finally blinked, and Stellar was ready. This isn't just a bullish setup. It's a fundamental shift in how the financial world interacts with blockchain. Stellar is quietly positioning itself as the rails for regulated, real-world money flows, and the overnight surge in adoption, liquidity, and developer activity proves it. If you're holding XLM right now, you're not early, but you're still ahead of the masses. Most of crypto Twitter hasn't caught on. The influencers aren't talking about it. But the institutions? They're moving fast, and they're moving on Stellar. This is no longer a wait-and-see moment. This is get in before the crowd wakes up. If this blew your mind or helped you see the bigger picture, smash that like button, share this with another XLM holder, and don't forget to subscribe to Be Crypto Smart, where we show you what's really moving crypto beneath the surface.